Hi everyone, let's go through my medium time frame and low time frame bullish and bearish scenarios, including potential trading setups, starting with the bullish scenario on the medium time frame, where this is the low of the bear market and we're looking for this yellow wave 1 to finish, for then eventually a wave 2 and then a big wave 3 to the upside. In this scenario, we have a 5-wave structure in the yellow one, waiting for this 5 to finish or might already be finished. And we are currently ranging in the most common target for a wave 5, which is in between the 1.236 and the 1.618, with a maximum target that is of basically 29.6k, taken from the high of 3 to the low of 4. At this level, we also have a very interesting support resistance area that we had throughout the years, and we basically last visited this area in 2022, so this would be quite a nice backtest for a move to the downside, and that's why you also see the potential short entry over here with the stop loss safely above and then trading it to the downside. Now in this scenario, wave 2, the most common targets for wave 2 are the 0.5 to the 0.786, which is currently at 21.4k to 17.7k, and the by far most common target for wave 2 is the golden pocket over here, sitting at about 19.8k to 19.3k, also in confluence with the lows over here of a wave 4, maybe for a little bit of a liquidity grab before then moving to the upside. I do think it is important to at least take a look at fib time, because a wave 2 tends not to be shorter than the 0.382 fib time, taken from the low of wave 1 to then the high of wave 5, currently sitting at about the 4th of May. However, wave 2 can easily take longer and even all the way till the 17th of July. If we look at the bearish scenario on the medium time frame, we have a W from the all-time high followed by an expanded flat in the C in a red wave X, and we're basically looking for a wave Y to the downside with prices of between 13 to 9k. This would also mean backtesting this area over here, which we haven't seen since a big bull run in 2020. In this scenario, the trading setup and the area of resistance, as well as the wave 5 target area that we are ranging in now, is exactly the same. It's exactly the same setup with the same resistances. The only big difference is how long you can hold this trade. It's either gonna be held till the low of wave 2, or you can hold it all the way for targets down for Y. However, we have to wait and see how price is going to develop, if it moves to the downside, and based on what it's going to do, we can eventually make new plans. If we then go to the lower time frame scenarios, I have 4 scenarios I like to show you. The first scenario on the 30-minute over here is that we have in the final impulse, basically, we have a wave 1, 2, 3, 4, 5. So 5 is in this scenario ended. And then we are looking for a 3-wave in this A, which is an ABC expanding flat, and then looking for a 3-wave in this blue wave B. So then we have an A expanding flat B for then eventually a C to the downside. Now if we then zoom in a little bit, you can see that this looks very much like a 3-wave structure, looking for then a move to the downside. We already hit the target box that I have over here, and actually in the Discord group earlier today I highlighted this target box as well. This area was for me very interesting for a potential A, B, C in then the blue B, and that is basically what you're seeing right now. So then we have this as an A, B, looking for eventually a move to the upside in that particular scenario, so in this scenario that is, which then gave the potential trading setup of entering around this target box, stop loss safely above, and then looking for upside if this is going to be an expanded flat, which is not yet finished. The most common target area for a wave B is between the 1.236 and the 1.38, which is currently sitting between 29k and basically 29.3k, which also has confluence with the 6-month wick low, and that is actually important to show, I believe, as if we go to the 6-month time frame and I zoom in, you can actually do this on your chart as well. You can go to the 6-month candle that started at July 2021, and you can see over here the low wick of this candle, and we haven't yet touched it. So we have this candle over here, then we closed a month to the downside early the first half of the year of 2022. The second half of the year of 2022 we made this candle, so we had a little bit of a gap in this area, basically a gap from 25.2k to then the level of 29.3k, and currently in this first half of the year we are kind of filling this gap over here. So this level to me is actually very, very interesting, and that's why even on the lower time frames you will see me have this level on the chart. Now there's kind of two scenarios to go about this potential wave X, either going up over here, hit the target box that I have at the top, which is the range value area high. We have a double top over here as well. So that is actually quite interesting. Or we just go down and take this low as well as this low, hit the daily level here at the bottom before then moving to the upside, where we are waiting for this wave B in blue for then a potential short setup, stop loss safely above, and then trading it to the downside. The invalidation for this trade is taking the low of wave A at 26.6k. A other option, which is quite similar, is once again wave 5 is finished. This is an ABC expanding flat, but now wave B is already in. In this scenario, the wave B is in as it hit the 105 target, which is a rare target for wave B in an expanded flat, and this being A, this being a 3-wave B, and we are now looking for a wave C to the downside, which should then go something like this. It should go down faster, 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 as this would be an impulsive move. So you would then be looking for some sort of a 1, 2, 1, 2, and then eventually a 3 to the downside, which would lead to prices much lower, at least lower of wave A. The invalidation is taking the high of this wave B. If we then look at the more bullish scenarios, so those were the two bearish ones, the first bullish scenario would be a potential ending diagonal in then a 5-wave structure. Then you have a 1, 2, 3, 4, 5. What I don't like is that this wave 4 is so long compared to this very short wave 2, however. However, a expanded flat is the most common pattern in a wave 4. We bounced on the 0.5 fib taken from the low of a wave 2 to then the high of 3. So in the end, it is valid, but wave 4, it just doesn't look as good, let's say, because of the wave 4 being so long compared to 2. But in this scenario, we have a 3-wave in 1, looking for a 3-wave then in 2, 3 waves in 3, 3 waves in 4, and then another 3 waves in wave 5. I have a wide target box over here in between the 6-month wick low as explained, as well as the high over here, the 1.618, which is taken from the high of 3 to the low of 4, as this area over here is again a potential interesting target area for a wave 5 in green. So the potential trading setup would be entering these shorts over here, stop loss safely above, trading it to the downside. We also have a weekly and a weekly naked point of control at these levels over here. So it is important to keep into account that price might wick above before then eventually potentially moving to the downside. Of course, shorts, guys, we are still in a bullish environment, so shorts till otherwise are risky. Make sure you have a good plan, good strategy, self-developed with entry requirements so you are not caught out. If we then go to the very bullish scenario, we have basically this move over here, a 1, 2, 3, 4, 5, which then is a bigger wave 1. So this is a wave 1, this is a wave 2, and we are now currently in a leading diagonal. So instead of this being an ending diagonal in a 5, this is a leading diagonal for 1, 2, 3, 4, 5, which then is a bigger one, looking to the downside for then a wave 2, before then a big wave 3 to the upside. The invalidation is taking the low of this blue wave 2. What I don't really like about this very bullish scenario, which basically also includes in this scenario that the high of a high time frame wave 1 is over here, the high time frame wave 2 is over here, and then we're looking for a lot more upside. It's basically this scenario. So we have wave 1, 2, another 1, 2, another 1, 2, before then another 1, 2, and more upside, many 1, 2s. Like, I don't really like it for a couple of reasons, but mainly because of the volume that is not really picking up. If this is indeed a 1, 2, 1, 2, 1, 2, and you know, the moon is the next target, you don't want to see the volume going down while price is making higher highs, basically. So it's not too bullish, but this is nonetheless an important scenario to have on the chart. We also have big resistance up here, so a little bit of a retracement would be my preference, but I do not know what price is going to do. No one knows what price is going to do. We can only see and wait and react on what price is going to do, because we don't catch knives on this channel, we don't FOMO, and we don't YOLO. We have a plan and we trade accordingly. Thanks for watching this video though. I hope this video was helpful or valuable to you, and also thanks for subscribing. I will see you at my next video tomorrow morning at 7 a.m. Central East European time. Bye bye.